Well, hello, all you market traders and profit takers. This is your Forex University professor at yourforexuniversity.com, and what a fabulous week we've had. All of it wasn't necessarily profit taking; it was just exciting to watch. Just it was exciting to watch. Let's take a look. Let's start out here, and we're going to take a look at the Australian dollar on our weekly chart as we usually do. Here you see the big drop that just took place. We are no longer in consolidation. I'll repeat that. We are no longer in consolidation after months and months of just ping-ponging back and forth on this weekly chart between in this gray area here. We have finally broken to a breakdown. It's kind of funny that it broke down. Well, a few weeks ago, what is it, when we first had the situation here with the the breaking of the low, when we had the close below the trend line. That's one of our standard signals to let us know that something is happening here. We talked about that during that week, and we talked about how we expected to see price come back looking for a ceiling, which is exactly what it did last week with its highs of 9,400, and then coming in this week and just from that point just crashing down. As a matter of fact, if I'm going to do something a little different here, I'm going to show you some day-by-day activity with quick view levels on the chart, showing you how all of this just really ran away from everything. This is Friday. Let me go back to Monday. Here's Monday right here. After this dotted line is where it opened, and you can see that there was resistance. We were looking for it to started out right here between this price channel high and this scan level, and we were looking for it to come touch it so that it could come back down, but it never touched it. We did have this Lone Ranger here, this dotted bluish turquoise blue line here, along with another quick view level. That's a barrier that we look for, the kind of things we look for to break, and it did break it, and from there just kept crashing. From that point on, the race was on to the downside. You can see on Tuesday here, we didn't come back. We could never touch the resistance areas that we were looking for. Then on Wednesday, the same thing. Never would come back to touch anything that would push down. Okay, it was just a continuous motion down until finally here on Thursday we get a spike up hitting the 91.93, which was an area of resistance, a weak area, but an area nevertheless. Really, the true area for resistance was up around the 92.43, but we never got it. There were even some signals that we might have gone long at the 91.40, but that didn't happen, and turned out to be an area for more momentum to the downside because of the spike coming up here and coming back and revisiting it for some more downward movement. And finally on Friday, we just kind of trickled on down again, never coming back to any resistance. That's some serious movement to the downside, as you can see when you look at the weekly chart. And it just kept going. There was no stopping. Meanwhile, over here on the by the way, yeah, this cross of these trend lines, 93, 94, 95 area, that's where we were last week. If you had started your shorting there, hooray, good for you. That's good profit right there. Over here with the euro, let's see there's a slight different sentiment going on with the euro and the pound. The week before, the pound and the euro were falling while the Aussie and the Kiwi were rising. Now we have the Aussie and the Kiwi falling, and the euro and the pound are showing some signs of strength. The pound more so than the euro, but they're still in bear territory. This is somewhat of a hammer here. We've got the tweezer bottoms, just like we had a few weeks ago with these tweezer bottoms, but these tweezer bottoms were still downward momentums because we were still closing below the open, so it was still a bear hammer versus this more bullish. But see, you see this little gray area right here, and then the gray area here. These are resistance areas of value areas that we're looking at. And you see right here this week, the price touched that value area and could not do much with it. Let's move into a 4-hour chart so we can see more specifically how that happened. Once we hit it, we started coming back again. And we do have another area up here, another value area that has a GAN level inside of it at 130.51. We're coming up off of the 28.98 GAN level with a little bit. It's reacting at somewhat of a support, but you know, we still have bearishness. I mean, we have to keep in mind that bearishness is still in play right here. If you take a look at how things were moving here, this created somewhat of a bullishness. We retraced and came back, and it's very short term. In the long term, we're still bearish. So really what we're really looking for are situations where we can get a good resistance area. It may revisit as far as all the way back to the 131 area up here where it originally fell. I wouldn't necessarily say that that's going to be the case, but it's possible. Let's put a Fibonacci against this move to the downside from last week. And what do we get? Well, look at this. We've got the 382 retracement, which is where we are, which is right at that area, the value area. And again, the next Fibonacci retracement is near this GAN 130.51, as well as being right in that area of the value area that we were talking about, where we might see some rejection on the move to the upside as early as 130.40. So hey, there's some situations to look for. And again, now the pound is much stronger. It has a better hammer. It's got more distance going towards the close from the open. It's a little bit brighter, but look at the gap that it took this week from this close all the way down to this open. That's a big gap. And almost a year ago, we had the same thing, only it was going in the other direction, to the upside, and this is what this is. And if we just real quickly throw a shade in an area to show you where that gap took place, look at that. We're filling it. A general rule most traders have is that gaps will tend to fill and then proceed in the direction of the gap, which is what happened here, and we might see that happen here. Also, keep in mind that this place where the support was located was not only a GAN level, that 160.68, but you also have the 125 over here. That's a level for buying to covering the shorts for those who are bearish, and a 125 would be taking a profit for those who are bullish. Okay, so we've got a lot going on this week. We're right inside of an area. We might create a little bit of consolidation even for a couple of weeks in this pound. If we don't see something take off, okay, or crash back down. We really, I mean, because of the area of price range that we're in based on what I'm seeing in the chart here. So let's see. Now, and again, this is kind of like looking at the euro, but I'm not the euro, but the Aussie. Only difference is here with the Kiwi, it's just a little bit more bearish than the Kiwi was. The Kiwi at least had some strength in holding in this flat line consolidation for those past few months. Here, not so. Okay, it led the charge to the downside long before the Aussie let go. And again, once again, we're at that 125 covering area for those bearish people who are looking to cover those shorts and take good profits. We might get some buying. Okay, now the other thing, the Canadian dollar. Look at this, these two yellow vertical lines. What this is, these are areas of what we call Fibonacci time. We might see at the time that we see this reach, we're looking for possibilities of some changing in the environment or the move that's being currently taken. So this week and next week, we're going to be very careful and closely watching the Canadian dollar in terms of its move back either to the downside or some form of correction to create a more heavier charge to the upside. More than likely to the downside. We've touched and closed above the 618 retracement, and we've made our way to this GAN level of 110.71. We've got to close above it, which is bullish. And also remember, we did talk last week that we were probably going to see something like that because we retraced our way right into this trend line. Okay, just like the yen had all that long consolidation and support that just would not let go. It would not fall under that support line until it hit the trend line and took off. And the Canadian dollar didn't necessarily have a long consolidation period, but the retracement came and it met with the trend line that was taken here, and we have a good move to the upside now. All right, and lastly, the franc has met with the 618 bearish retracement. So there could be a very good chance of some correction. We're a little far away from our trend channel, which is gives us room to pause. There's obviously some profit taking that was taking place, along with possibly some people looking and waiting and lurking to short the franc. We'll see and keep charge on our quick view. Here's a support level here at this not only 50% retracement, but it's also a GAN area at the 92.68. So we might look for that to be a support for the franc. And even when you look back over this is an area. If you see how that GAN level is riding through these areas here, you'll see that there is reaction to that level. From last year. Last year we had our resistance areas from last year way up here above the 96.50s. So we're a little bit away from there, about 150 pips away from there. We can still see some movements to the upside. Very, very likely. Very, very likely. We can see as far as getting up here to this 94, 93 area real easy. To see that, there's that 125. Okay, keep that in mind. We are in the uptrend here with the franc, uptrend in the CAD, uptrend in the yen. It doesn't mean that next week is going to be a bear candle. We might see some retracement. Excuse me. But we have to be careful. We have to watch the quick view and see how it works. If you don't have the quick view, well, what can I say? You need to get it. It's an essential tool with essential information for trading successfully. All right, that's it for this week, the week ending of September the 12th, 2014. I am your Forex University professor at TheFXU-Professor.com, wanting to see you prosper, and I mean that genuinely. So until next week, hope all of your trading is profitable.